Welcome, everyone. We're just waiting a minute or two as people trickle in, and we'll get started just in a few minutes. Okay, and if you want to post in the chat where you're logging in from, that's always fun to see where everyone's coming from.
No, I'm logging in from Denver here. We've got a beautiful, clear day. I think it's starting to warm up here in the spring, and so anyway, yeah, beautiful Denver. Probably not as nice as South Florida though today.
I'm very excited about spring. Spring is officially hitting Utah, I think.
Yeah, I'm calling from Europe, so I don't know if other people are calling from Europe here in Germany, but as you can hear already with my accent, originally French.
We got Bangalore, another Denver. Houston, Texas. Woo! I'm originally from Austin, so big fan of Texas. Okay, if you're just now joining, go ahead and throw in the chat where you're coming from. It's always fun to see where everyone is from, and then we'll just get started here in a couple minutes. We've got Boston, Orlando. Orlando sounds nice. That is a place I would like to be right now.
Me and Nicolas were talking about the international language of accounting. It's always cool to see people from all over the world. With all the cultural differences, all the language differences, it feels like when we get into like deep technical accounting, that we're speaking exactly the same language, and we all kind of come together. So anyway, it's cool to see people from all over.
Next time we should ask, what is your accounting language? Like, which gap do you talk?
Yes. I did interesting, and this is a long time ago, before the mass adoption of IFRS. My final paper in one of my graduate courses was on IFRS and the adoption of a single standard globally. And after all my research, my conclusion was there's no way. Like, the cultural differences are too wide. Like, there's no way we're all going to come onto a single standard. And it's been interesting to watch over the last 20 years how dead wrong I was. And I think there's a few holdouts, but not very many. Everybody's really adopted IFRS. We're in the US here, we're one of the holdouts, obviously, to moving on to IFRS and keeping off of this global standard. But it's been fascinating to see everybody come together on the accounting front.
Definitely.
Good.
Okay, well, let's go ahead and get started. So welcome, everyone. My name is Raina Robinson. I'm a product marketing manager here at NetGain. Super excited about today's webinar. It's all about why financial closes fail and how AI and automation can fix them. If your month-end close feels like a stressful marathon, you're not alone. I hear it a lot. But with the right technology, companies can close faster with fewer errors and less manual work. So we have two amazing speakers today. Adam Riches, CPA, CEO, and founder of NetGain, and Nicolas Boucher, founder of AI Finance Club. Adam and Nicolas, I'll let you both introduce yourselves here in a second, but just as a little background, they are both ex-auditors, and they both worked in the corporate world. They've worked with a lot of companies on their close processes. And with that experience, they've seen the good, the bad, and the ugly. I'm sure you can talk more about that, but when it comes to the close, they've kind of seen it all. So they're going to share their experience on how AI is transforming the close process and what the future of accounting looks like. Adam, Nicolas, do you want to say hi, introduce yourselves?
Yeah, thank you, Raina. Yeah, very excited for today's session. It's always great to have a conversation with Nicolas here. And So a little bit more about my background. So I was in the mining industry for about 7 years after I was an auditor. And mining companies are public companies. And so we were listed on the Canadian exchange, the Australian exchange, the US exchange. So we had all the regulations that came along with that, all the complexities of a global operation. But these were smaller businesses. And so we were budget constrained. And so dealing with, I imagine a lot of people on the call like have constraints on budget and how you deal with some of these complex problems. And so was really exposed to that close cycle during those 7 years. And then I went and moved into the technology side. I worked directly for NetSuite, and where I got to work with hundreds of different companies all around the world with some of the complex finance and accounting issues they dealt with, and then started NetGain about 7 years ago to address with technology a lot of the challenges that I suffered with personally as I was a controller and dealing with those difficulties. So anyway, very excited to be on and talk about what the experiences or the things I've learned over the years. So.
Yeah, great to also be there, because I've worked 15 years in finance before training finance professionals. And that's actually a lot of this experience. I use it when I train, because I can use a lot of the examples I've gone through, the good ones, the bad ones, and the ugly ones, like we said before. What was really cool at PwC at the beginning was to see a lot of the clients and what worked, what didn't work. But then when you have to do it yourself, when you are on the corporate side, that's where you really learn. And it's not that easy as what you could think when you are an auditor. But that's also cool when you get to do it your way, when you have a team and you start to implement processes and to see how you can improve the month-end closing by reducing the time you take for month-end closing, but also to improve the quality. That's also something in finance I think we should celebrate more. I used to, for the story, I used to say to all of the people in my team, okay, we are not the sales department. We don't have a bell where each time there is a sale we can ring. But once we have signed the month's end closing and we really close and we presented the figures, we should celebrate once per month ourselves, and just like a good clap on the shoulder. And that's like a habit we decided to do. And it was really like the nice time together to think, okay, like we work really hard. Now we can maybe breathe like a few days before all of the crazy routine comes back. And I think a message for everybody showing us, watching us today, think about that. Like when you are done, if you're a manager, like try to celebrate with your team at each end of the month's end closing, the closing and the work that everybody did, because that's something we should do more in finance.
I really like that. Thanks, Nicolas. Thanks, Adam. We're really excited to have your expertise on this call. So let me just jump back here again. So just a little bit about what we're going to discuss today. First, we'll discuss some of the most common red flags that drag out the month-end close. Next, we'll dive into how AI and automation can significantly streamline that process. And I'm really excited for that section because Nicolas and Adam have some really cool things that they're going to show you. And then we'll explore what the future of financial closes looks like and how accounting roles might evolve along with these technologies. And finally, we'll wrap up with an audience Q&A. So be sure to send in your questions throughout the presentation. And before we dive in, I just have a couple housekeeping items. So like I said, we'll have a Q&A session at the end. So you can submit your questions anytime into that Q&A box. And the session is being recorded. So we will share out the recording afterwards, along with any additional resources that we mention in the webinar today. And you can go ahead and feel free to share that. Okay. So before jumping into the topic, I want to just do a quick poll. Let me go ahead and launch that. We would love to know, let's see. Okay, that should be live now. We would love to know how long the close process is currently taking your team. And as those poll responses are coming in, looks like we've already got quite a few responses. As those poll responses are coming in, Nicolas, could you share what you typically see across the industry when it comes to close times?
Yeah, so for me, there is two things. There is the close time, but also when do you decide to close? And you can be really long if you want really to close on the last day, because like so much is happening last day. And some what they decide is to close a bit early. So those are like two different criteria. But what I see usually is around a week, like 5 working days to 7 working days. So this is what I see. I rarely saw companies like having 2 or 3 days, even though like a lot of us we would like to have that, but it's most of the time over 5 days.
Okay, awesome. Thanks for that insight. Okay, we'll just leave this up for 10 more seconds. Get the last few.
I was going to just add on to that, Nicolas. So yeah, I agree. That's probably about the average. What's interesting though is we see some big outliers. 3 weeks, and even longer on the high end. And then there are some organizations that have this process dialed, and 2 to 3 days where they can have it closed as well. And are super efficient. And I think, there's a tolerance for estimates and things when you're on the shorter end of that, versus, a complete close on third week or whatever. So let's see.
For sure. And it looks like the majority, 55% do fit in that 6 to 10 day average close, which, can still cause a lot of stress, a lot of extra added stress. So, very excited today to talk about how we can kind of dial in the close. Nicolas, I know you work closely with finance teams implementing AI tools. From your perspective, what are the biggest obstacles causing that prolonged close cycle?
Yeah, so I would like to hear also from the chat, like what people from themselves, the problems they have with month-end closing, to see if what I've prepared will also like echoed from people what they leave every month. But I've identified from my past, because I've worked with a finance team, and I remember the first time I had to take over this team. The challenge is the main accountant, so the chief accountant, he was there like since 20 years. He had everything like really in his hand. He could do like almost his accounting like this. And and this person was leaving 3 months after I arrived. And everybody was panicking, and it was really a stress about that. So we had to change a lot. And so I had, even though it was not my main job, but I had to put a lot of effort in this closing. And so based on my experience, this is what, for me, I saw as the red flags. The first one is that it takes too long. We saw like a lot of you said above 6 days. And I don't know if you know the Parkinson law, Rena and Adam. Do you know this?
Yes. I think so. I think, yeah.
So if you give somebody 3 months to do something or 3 days, the difference in quality will be really similar, but so you will have almost the same output, but the person taking 3 months will really take the 3 months, because they will have 3 months to do it. But if you take like just 2 or 3 days, the quality will be almost the same. So don't give too long also to your team to close. Just say, okay, like we have 5 days, and we'll find ways to make it. So that's the first thing, is also don't be too tolerant on how long. Don't accept the statu quo.
Sorry, I can only think of one good example here, Nicolas. If you're getting married, I imagine we've got some people that are engaged to be married on the call here. If you have a wedding that's planned for 3 months out, or planned for 3 years out, again, the quality difference will be very minor. But the suffering of planning a wedding will be spread over 3 years instead of 3 months. So it's a similar, like, just lock in the suffering to a much smaller time frame. Sorry, so I agree with this. I think it applies.
Yeah, that's a really good analogy. Yeah. So the second part is that even though everything is clean, somebody will come just at the last minute and will ask to adjust. And like if it's just an adjustment that takes 5 minutes, then it's fine. But sometimes a lot of adjustment means that somebody has to rerun a lot of the processes. And I remember that we had a process which was there to calculate the variances by cost centers, to have like the hourly rate variances. And a lot of time, like just really like for a small amount, somebody wanted still to see that across all of the cost centers. So we were waiting like one afternoon that all of this was processed, even though like it didn't bring any value. But just like some people are too strict with rules, and those adjustments will make all of the team suffer. And that's also something you need to protect as a manager. You need to protect your team from this adjustment. And if they come, you need to find a way to be pragmatic about it. The third, we still do too much manual work. And I'm going to show like a bit later a video of how you can use AI to reduce this manual work. But if it's manual, mean you cannot compress the time. You cannot also document that well, because especially now with everything digital, if you have too much manual work, it takes a lot of time. I remember when I took over my team, I saw people printing documents of 80 pages, and they were going on each page and just like signing off. And I was like asking, why do you do that? Yeah, because we always did that. And I was asking, yeah, but the list is an Excel file. So you could just like reconcile the total and then it's finished. And they were just not empowered to take this decision. So they never took it. But once you use the opportunity to bring somebody new, or maybe to sit down with people doing the work, you can really ask, why are we doing that? And if tomorrow it means, okay, we don't print it anymore because it doesn't change the result, then you can save a lot of time. And now with our digital world, it should be almost automatic that it should be a no paper closing. Like that's one advice. The fourth one is really not clear to know who is done and on which process. Especially if you have a big team, I know that if people don't communicate well, you have somebody is going to wait one day to do a process they could have started yesterday. And that is because people are like just in their process, they don't know the impact of their work on the others. They also think that there is no pressure for the timing on some of the tasks. So you need for that more communication. Problem is that the closing is not the right time to communicate because everybody is under pressure. So what I used to do is at the end, when we celebrated the closing, we had one round where we discussed and asked, okay, what could we do better next time? And that's when everybody is more relaxed and has more time to talk about this problem and to say, okay, like next time, let's be more open to know when we are done, how and where do we document that so everybody can start on time. And then the last part, I was talking to you about this person leaving the company. And this person was doing almost all of the processes in accounting. And everybody was afraid that this person was leaving because there was never a delegation. There was never a replacement. There was never a duplicate. And so my advice on this, don't think that because somebody did only accounts payable all of their life, that they should do that always all of their life after. We use the fact that the chief of accountant left, the fact that the team reduced. We said, okay, now everybody should be able to do all of the accounting processes. And then you just switch from month to month to make sure there is the 4 I's principles, but also to make sure everybody learns about all of the processes. And if somebody is sick, then you don't have the risk that you have to wait. Because that was the fact actually for a while, that if somebody is sick, then you have really the team waiting and then you cannot even close. And that's like the biggest risk. Don't be dependent on one person.
I really like that. I like those red flags that you shared because deep down, it seems like the overarching problem is just being intentional about the close, understanding, kind of taking a step back, looking at the big picture. I know, Adam, that you also have worked with a lot of companies on their close, and I want to keep building on what Nicolas has shared. So would you mind sharing kind of your view on the close and how that has shifted as an owner of a company and how it's shifted over time?
Yeah. So it is an interesting perspective. The first thing is, and to just reinforce kind of all of Nicholas's points that he made, is really getting structure around it, assigning the tasks out to the different team members, having visibility on how they're doing, where the bottlenecks are, and what it takes to continue to move the process forward. Just having a dialed process and measuring and improving on that process every month. But there's a few key things, and I like to take no half measures, right? And so one thing that I was a consultant at Deloitte, and one of the tactics that they would take in some extreme situations where the reporting packages, what we see is the reporting packages tend to grow and grow and grow over time. And so, and nobody really knows who's using these reports, where they're going, if they're being read or analyzed. But the demands, it feels like, only go one way, right? And it's to increase the number of reports that the accounting team has to produce. And one of the kind of drastic measures that would take occasionally at Deloitte is you don't produce any reports at the end of the month. And then you see who complains about which reports, to see which reports are relevant, right? Which reports are being read and which reports can't be missed on a monthly basis, to try to trim down the output. Like trying to get it down to the core most important things, I think is something that we don't do enough of, and cut what's required of us on the output. The other thing is looking at understanding the concept of materiality. And I think we, as accountants, a lot of us have gone into the profession because we like to get things balanced perfectly. And it really, really bothers us when we're a penny off on something. And understanding the principle of materiality, I had one of the CFOs I worked for explained it to me, and the difference is, being a chainsaw accountant versus being a scalpel accountant. And I think the idea is probably repulsive to a lot of us on the call to be a chainsaw accountant. But when it comes to speed, and when it comes to getting everything correct in an order of magnitude for the management team to execute and make fast decisions, I think we have to think a lot more like a chainsaw accountant. And we have to also be statisticians, right? We got to figure out how to come up with estimates and how to get materially close at the end of the month without getting these things down to the penny. I think oftentimes that, becoming a scalpel or being a scalpel accountant costs the company time. And that is the most critical factor as we look at the close, is making sure that we produce these things quickly. So that those were just kind of some high level principles. But one thing that shifted from my perspective, because now I'm different. I'm on the receiving end of the data versus the preparation end, and time has become the most critical element for me. If it's 3 weeks in, like I've already got a whole new host of set of problems, and it really becomes far less relevant whatever the close package looks like 3 weeks after the fact. We need to be able to make actionable decisions based on the data that's coming in. And so I think, a lot of us are trained in IFRS or US GAAP, right? Like we're trained on financial reporting as we go through school. And when we look at the close, we tend to look at it through the lens of financial reporting, which by definition is most likely external financial reporting, right? Producing these IFRS or GAAP compliant financials. And I think those two, that it's very difficult to manage a business based off of GAAP or IFRS financials. And so to cater to the management, I think we need to think about the close a little bit differently and segment it into different buckets. We talk about a hard close and a soft close, but we need to look at it as kind of an incremental stepped close process. And I think producing IFRS or GAAP financials is probably step number 3 for most companies, right? This is how we talk to investors. This is how we compare ourselves against other companies. This is interesting, but not a tool that we can use to manage our businesses. I think the first step is absolutely delivering a direct cash flow statement. One that comes as early as possible. So getting the cash inflows and outflows to management as soon as possible, I think, is step number one. The second step is really a simple accrual or the management reporting that needs to come out. I don't think, where you get into gap adjustments, where you've got, your revenue recognition or your lease accounting adjustments, some of these things that are time consuming, or these big estimates, tax provisions, things like that, I think can wait and should wait until the end of the close, and getting what more of like what we call a simple accrual financial statement put together. This is capturing all the economic activity during the month. So payroll accruals, revenue accruals or billing, making sure all of that is buttoned up. But getting simple accrual financials as step two, and then step three would be full GAAP financials. So trickle the data into management instead of one big bang with GAAP, financials like at the end of the period, I think is something that we haven't been leveraging as much as I think we need to in our profession to provide immediate value to the executives that need to make some of these key decisions. So that's something that shifted, I think, for me, Raina, over my time as an accountant versus my time here as an executive of the company. So I think viewing it differently is I guess what I'm getting at there.
Yeah, that's a great insight. It's shifted more to that speed, it sounds like, which I think is really important because as accountants are faster, they have more power to be involved in the strategic planning of a company because they can get that financial data to the CEO, the CFO, etc. Awesome. So we're going to continue the discussion, but as we're talking, if you can throw in the chat, what is your biggest close challenge? I think that'll be interesting to kind of see what those listening are struggling with in their close. And then I want to shift over to how AI and automation can fix the reoccurring close problems we just discussed. So, Nicolas, would you like to start by breaking down some of the key processes to be automated in the close?
Yeah, so you can basically start like automating everything, but there is a degree of of like how much time you really save, because what is good with AI is to do 80%. Like each time you want to go like to 100%, you're going to spend more time to get 100% done rather than trying to do this last 20%. The other thing as well is, and I will show you an example, but there is a lot of integration between all of your general ledger and subledger. If you have a really well-oiled data integration between your accounting ledger and all of the subledger, then the accountant doesn't have to book anything. The accountant doesn't have to like upload any transaction. So it will save a lot of time, but that's the perfect world. Now let's go and look at how to solve all of this world, which is never perfect. And I want to show you like one example, which we can all already do today if we spend a lot of time doing all of this data cleaning, data wrangling, data manipulation before we can book something. So here, I take the example of something that I have here in Google Sheet, but could be also in Excel. I have a set of credit card statements, which I want to book. And the thing is, those credit card statements, they are all over the place. I have one tab per credit card holder. Plus, you can see the data doesn't really look nice. There are lines that I don't need. There are columns I don't need. So normally every month, I will spend maybe 1, 2, 3 hours cleaning that before I can book it. Or I can go and talk with a LLM chatbot and show an example of the data. So I don't upload all of the data. I just show an example and I explain just with my words and with like a good and logical language. I explain what I want to do. And here, basically, I say I want just to keep these 3 columns. So just to come back to show you. So I just want to keep these 3 columns because I have there the date and the amount and the description. And I want to consolidate everything. And then I explain I want basically to start cleaning by saying that some lines I don't want to see, I also want to have the company name. I want to have the card holder name. So all of this information, which is not clean and not well documented right now, because it's only in one cell in each tab, I want to have in the list. So once I explain what I want, that's where AI is going to help me by writing for me a script. And the script is the language of the computer. So with the script, basically everything I ask with my own words, it's going to be translated in a code that the computer understands. Now I can take this code and I can ask now to my LLM chatbot, how can I use this code? So what should I do now with this code? Because I never did that. And myself, I never coded. And because the instructions here are really clear, it just says you go in your Google Sheet and you open the app script of Google Sheet. Then you paste this in this app script. We call it data cleaning credit card. We rename it and we run it. And when we run, there was just a window saying, okay, do you want to have access to your data? So yes. And then this script has access now to my Google Sheet. And now look what is happening. All of the work that I needed to do manually is done now automatically. Meaning that I have here for each cardholder, I have all of the dates, description, amount, but I have also the cardholder name and the company name. And I challenge you, if you want to do that manually, you will take for like this 30, 40 tabs, you will probably take like half an hour, 1 hour. And this is done now like in 3, 4, 5 minutes. And I have also to tell to everybody, I almost never script. And this was good from the first trial, meaning I didn't have to spend 20 iterations until I got the code right. I just need to explain what I wanted in a clear way, in a logical way.
So I love this example because I think it highlights, at least for me in the early days, experimenting with AI, it was like trying to throw it into the system and have it process data for me. And I think sometimes that works. And I think other times we need to take a different approach with AI. We can have it process data for us, or we can have it produce code that then processes the data for us, right? And I think you, instead of trying to throw it in and prompt it every time to get the same output, you've instead have a clean set of code that can automate this for you every month. So both leverage AI. It's just one is leveraging it to help you build repeatable code. So I have a similar example, and I wanted to show walking through. We did this internally. So our big premise is we want to bring these tools in. So instead of working against the system, use the system to work for you. So we built code so we were pushing bank data into AI, and we were pushing the system transaction data inside of NetSuite and having it run a match. And so what you're looking at is that match running real time with AI actually generating the different matches. And you can see our confidence interval, or the AI's confidence interval, coming up on the left-hand side here. And the first thing you'll probably notice is it's pretty slow. The second thing you'll notice is the confidence intervals are low. And as we continued to rerun this and iterate over a series of weeks to try to get this thing dialed, we just couldn't get it into a spot where it was repeatable and consistent and had a high level of confidence. And so this is where we had to kind of pivot our approach, similar to what you did, Nicolas, is we took a very different approach. So I'll show you what we did. Instead of trying to get the matches, we had it generate an algorithm for us to produce the system matches inside of NetSuite here, inside of the accounting system. And so this you'll see is very different. First, the speed of the matches that pop up, and then two, the confidence interval. So we were able to get the algorithm to do the heavy lifting and not the AI. Instead of pushing all this data out, now we get to do it all inside of the system with a very, very high degree of confidence and with these matches. And then the outcome of this is we've got an audit trail on why the algorithm made the match, and that helps us create a new rule so that we don't have to create, have these fuzzy matches happening every month. We can create actual rules that will automate the matches. And it becomes very easy now with this algorithm that's been generated. So it's just another example, I think, of how we can use AI to help us deliver code versus having AI do the actual heavy lifting for us. Instead, we get the code to do the lifting, which sometimes is a lot more efficient and a lot more effective. But I want to echo what you said, Nicolas. Like, my whole career wished I could code, and I just never was able to wrap my head around it and figure out even basic coding at a very basic level. I couldn't do anything. And now it's pretty amazing leveraging AI to see just what you created in Excel 3 years ago would have felt so far beyond the realm of possibility. It would have just seemed like magic. And now seeing these examples, it's absolutely in the realm of possibility. And if you don't know how to deploy code inside of a Google Sheet, then you just ask AI to explain that to you. And if you still don't understand the explanation, ask it to, if you're like me, you ask it to explain it to you like you're a 4-year-old. And then it tends to dumb it down to my level. So it puts all of these ways of automating things within grasp for most of us here. So anyway, very, very exciting stuff happening here. But yeah, the different use cases, I think understanding how to leverage AI is important, when to leverage code and when to leverage the system for processing it. So
awesome. Raj in the comments said getting all the bank accounts reconciled quickly is one of his biggest pain points in the close. And this is something where AI and automation truly can make a huge difference in his processes and in bank reconciliations.
Yeah, and we're looking at NetSuite, right? And our company really focuses on optimizing NetSuite. And I understand we have a lot of people that are probably not, using NetSuite as their core accounting system. But I think that the underlying point is to try to get the AI to help you do a lot of that heavy lifting, and formatting bank statements that need to be imported into whatever system you're using is one of those key steps that can be automated. But one thing that we're pushing for, Raj, is moving bank recs. And I think this could be applied across a bunch of different domains, but moving bank recs from a month-end process to a daily process. And this is kind of a shift in thinking so that you can move that huge amount of work at month end into the daily. And the benefit that comes out of doing a daily bank rec is your management team now gets visibility into the actual reconciled bank, the amounts that they have of cash they have in the bank, versus having to wait till a week or 6 days after month end to get that data. But the bigger benefit is it removes that huge blocker at the end of the month, and you can do this and iterate, on a daily basis versus the month end. But one thing that we have launched and that we're excited to, I want to share. Maybe this is probably a good point to share it. If we want to share the direct cash flow statement, Raina, is we have come out with, because inside of NetSuite we're doing the bank reconciliations on a daily basis using our bank rec tool. Now we can produce at any point during the month, but especially at month end, on day one, this direct cash flow statement. And the FASB and the IASB, they launched this. So the FASB, added the cash flow. The cash flow is a very new thing. Indirect and direct is a very new kind of addition to the financial statements. It came out in '87 with the FASB, and it came out in 1995, I think, is when the IASB adopted the cash flow statement. And they both had a strong preference for the direct cash flow statement, with the indirect being the optional alternative. And because of systems just weren't created to produce a direct cash flow statement, everybody kind of opted for the indirect, which usually comes after you close your month and you got the financial statements prepared. This alternatively can be available on day one. And the IASB and the FASB both talked about the strength of the direct cash flow statement and how effective it can be for looking at liquidity needs and requirements. And this is why I think the direct needs to be massively prioritized over where, a lot of companies don't produce a direct cash flow. The majority don't produce a direct cash flow statement. They lean on the indirect. And so we're very excited about the launch of this direct cash flow statement inside of NetSuite. So for those that are on NetSuite, this is exciting. But for those that are not, I would start to shift the thinking on how you may be able to take the system data as well as your bank data and be able to compile this for the management team. I know this has been, we've had this internally. We've been kind of iterating on it internally first as the beta tester. And it has been a game changer for us at NetGain. And so anyway, very excited about the launch of this, but we can move on. Enough about cash flow statements. I could probably go on for the rest of the time about that.
Well, that's great. Those are some really great insights. Nicolas, did you have anything else to add about AI? Did you have any other AI tips and tricks that you wanted to show?
One thing where I want to show you something a bit more advanced, because here I show you how AI is helping you scripting a work, and then after you have the automation done and you don't need AI anymore. But there is work that we do which is not rule-based, meaning when, for example, we look at those credit card statements and we want to classify them. This is not really like based on the description. You cannot give a rule because it's a lot of interpretation. If it's an Amazon bill, then maybe it's a cloud services. If it's like a plane ticket, then you will need to put that in travel. So we know that as human, but if you can build a formula that does this, not really, because it's really hard. But the LLMs actually, they have an understanding of the word, so they can help us. And so I've built here with somebody from the AI Finance Club, an expert that came. We built together an agent which does this, and I want to show you how. So here, and it's the frontier between AI workflow, which is basically you send something to the AI and then you get a feedback, and an agent which start to work more and more autonomously. So it's at the frontier. And we did that in N8N. So that's Tobias Svingman who did that for the AI Finance Club. And what we have in this agent is the access to the credit card statement Google Sheet, the one that we cleaned together before. And in this one, you have both a sample of transactions to categorize plus the categories. And then we are going to merge all of this and send it into the LLM. So here's OpenAI with a prompt. And in the prompt, we are explaining that the LLM is our text classifier expert and needs to classify all of these transactions based on the categories. And on top, we also want to add a location if a city or maybe like a state is identified in the text. So this is the prompt we give with our input, with our table, and we get as the output, we get line by line the category. And so when we'll get it here in this Google Sheet. So that's the empty tab. Then I will press run or test workflow. And you can see that everything is running. So we grab all of the information and we send the information in OpenAI. And that's where the work will start going on with our data plus the prompt. And here we have OpenAI answering with the message line by line, where we have all of the categorization, and we see that directly in our Google Sheet. So imagine the time that you are spending now categorizing like this type of credit card statements. And now what you just have to do, like you will have delegated to an intern, you just need now to review if the work is well done. And maybe you can use materiality to only focus on the top 20 bigger transactions, because those ones really need more attention. And then all of the $10 transaction, you can just leave it and believe that what is coded is okay.
I love that, and I can already imagine, like the immediate like reaction is like, well, what if the coding is incorrect, right? And of course, I imagine some of those lines aren't 100% accurate,
Yeah, yeah.
but treating it almost like your frontline AP clerk, right? That frontline intern that you said, that's going through and doing a detailed analysis of it is really the right way to look at it. And we know that there's obviously imperfections in there, but you just look at it as a massive shortcut to do a lot of that heavy lifting before you go in. And of course, we still have to review it. You'd review it if it was a human doing it, and you'd review it if AI did it, right? But still, that's pretty cool. That's pretty impressive how you did that.
Yeah, it's cool to see it in action.
Yeah.
For sure.
That's awesome. All right, so just shifting a little bit, I want to talk about the future of the financial close and accounting jobs. Adam, do you want to address that first? Do you want to talk a little bit about what you see as the future of accounting?
So I do. I go back to maximizing the value and the partnership that we have as accountants with the executive team. And looking back, I mentioned the cash flow is new. I look at the cash flow as kind of this primary driver to the close. And this is something that I hope gets widely adopted in the future. The best companies are doing it today. And if we even go back to some of the best, I think some of the people that pushed the limits of accounting and helped innovate in the recent history, you look back at the Industrial Revolution and a lot of the changes that took place with business during that era. And it was, John D. Rockefeller, Carnegie, and J.P. Morgan were some of the builders of some of these monster companies that came out of the Industrial Revolution. And all of them were accountants. Like, they all started as accountants, and they were all very focused on managing their cash flow. And they called it the funds flow at the time. The innovation of like the direct and indirect cash flows didn't exist. So they called it a funds flow, but they would monitor cash and monitor their expenses at a very granular level. And I think getting back to that and leveraging technology to help us produce a direct, actionable, like a cash flow statement, I think is something that I hope we embrace in the future. I think leveraging AI is going to accelerate our speed of close. So I think the best companies will have a much faster close cycle. They'll leverage the technology a lot more, and they'll be able to, by default, to provide a lot more insight into the data and into the numbers and the spend to help management make the right decision. So that's where I see the future of accounting going.
Awesome. So I know that across a lot of jobs, including accounting, it feels like it can be a scary future with AI because it feels like, oh, is my role, is my job going to become redundant? Nicolas, how do you usually handle concerns like that?
So here, there was the ex-CFO of Oracle, Jeff Epstein, who is also a member of the AI Friends Club and a friend. Yeah. He said one time in our masterclass, and I will never forget that, he said that the job of accountants, CFOs, finance managers, each of us, we have two responsibilities. Do our task like we are assigned to, but the second one is actually to improve the way we do our tasks. And I think a lot of time we forget that, because if you only do work like you did all of the last 10, 15 years, then the company will not be productive. The company will also lose in competitiveness, and you have also more risk that somebody is coming and then maybe be faster or better than you. So you need also to spend time on the second type of task, which is improving your standard tasks. And now with those tools and what I just showed you today, like those are just two examples. You have no excuse anymore to not improve your tasks. And if you improve your task, your manager will love it first, because you will be seen as somebody proactive who can find competitiveness, but then you'll have more time to do more human tasks. And this human task is what also Adam was saying, is where we are going to spend time calling the other departments to understand what happened in the figures. We are going to spend time also report to the management, maybe things that we see every day, but we didn't have time to grab and to identify, like, okay, what is the problem or what is the solution? Now we'll spend more time either with the management or with the other departments, but create this value where in finance, we can have this exceptional place where we are in the middle of everything and we have access to everything. So we should use that more, but use that more as a human and let those robots just do all of these robotic tasks.
Yeah, it can feel overwhelming, I'm sure, when you're dealing with a busy close, when you're trying to do a lot of other accounting tasks. Have you found a way that people can learn those AI and those important tasks with AI without it feeling overwhelming to the other parts of their business?
Yeah, so there I will preach a bit what I do. I spend my day on this, and I also come in webinars. And I know other people, they have a full day, and if they came today, like they invested 1 hour of their time, they're already different than most of the other accountants or finance managers. So if you're watching today, you're already different. But a lot of the people don't invest. And even if you invest, if you have only 1 hour per day, it's not enough with everything that is to learn. So that's why reach out to people like me, follow me, or have something like the AI Finance Club where we have all of the content digested for finance people. We have live course, which is much nicer to learn from. And that's, for me, the best way to learn is to learn from somebody who already understood it and will just show you the shortcut to learn it. And so you don't have to figure out everything by yourself.
Awesome.
And,
Yeah. Yeah. Go ahead.
I wanted to jump on here really just, and I know we want to get to Q&A here. But this is not the first time that a major shift has happened in our profession, but I do believe this is a big change that's coming about, and I see opportunity everywhere for all of us. There's a shortage of it. Just so happens to be hitting us at a time when we've got a massive shortfall in the numbers of people coming into our profession. But the first time was when mainframe computers were built. There used to be armies of bookkeepers that were tabulating data, consolidating information. And when there was an error, we had to start over and retabulate everything. And there are pictures, if you Google it, like there are pictures of rooms full of people with the green visors and the pocket protectors and the adding machines. Like this was the world that we were in when mainframe computers hit. Mainframe computers came and we automated that accounting process within a system. And we moved away from mainframe to off-the-shelf software. The problem with that is we took a massive hit in the functionality that we had. And so now the system wasn't built for our business. The system was more generic, and there were gaps that came along with that. And what happened at that same time when we started to adopt, it was MRP, and then it evolved into ERP. But when that adoption occurred, almost simultaneously, we got hit with the second massive innovation that impacted us in our profession, and that was the spreadsheet. I believe it was Lotus 1-2-3, like came out and rocked the accounting world. And so and of course, this was a lifesaver for us, or perhaps a Band-Aid that maybe created a lot of challenges, but it really helped us from an efficiency perspective. So you go from mainframe to Excel spreadsheets, right? That we're dealing with today. And now we have this new innovation. And I think this will be as impactful as the mainframe computers were, as the spreadsheet was to our profession. And how we adapt to it is, I think Nicolas is exactly right. We now have to spend time learning how to use a spreadsheet. Like they did back in the day when the spreadsheet was introduced. This is the new spreadsheet. Like we have to learn how to leverage this tool. And if you're spending an hour on a day, a half an hour a day, doing things like this and sharpening the tool set that you have, it will go a very long way. The AI Finance Club is one incredible resource, and then buying tools that can do this for you. But as you look at AI-enabled tools, like be very, very scrutinize them heavily, right? Look at only the tools that will have a positive outcome for your business. and don't buy into the AI hype necessarily on the software that's out there, but look at where it can have a hugely positive impact on your processes and on your businesses. And that's the side of the world that we're heavily investing in right now too. So these things I think will set you apart in a huge way. Just like those that were the early adopters of the spreadsheet, I think now's the time to adopt heavily this new technology that we're all figuring out together.
Absolutely. Awesome. Well, thank you, Adam and Nicolas. I feel like we've gotten a lot of really good content for throughout this hour. I know we're running short on time. I just want to really quickly put a plug for next steps. So if you are interested in getting a free close checklist to kind of help you dial in your close, we have a link here. And I will actually just throw this all in the chat, all of these links, so that you can have access there. But then you can also book a demo with NetGain to see how NetGain products can help you speed up your close. There's also Nicolas's great courses online that you can check out. And of course, follow us on LinkedIn. So, all right. That being said, let's jump into Q&A. So if you have any questions, please go ahead and submit them into the Q&A section. Okay, we'll go ahead and get started with the first one here. How complicated is it to implement AI and automation tools if our ERP isn't top of the line? Can mid-market companies leverage the same benefits? I'm going to go ahead and direct that to you, Adam, first.
This is a perfect question. We think that, obviously accountants spend a lot of time working against their accounting systems because of some of the difficulties or shortcomings that they oftentimes have. We've gone the extreme in trying to get the accounting systems to work for you. But when you're stuck with a system that doesn't have, some of the latest tech, I think we saw Nicolas highlighted a few of those areas. There's a lot that we can do outside and import the data into the system. And I think that's if you can't do your bank reconciliation and your auto matches inside of inside of your accounting system, then find ways to leverage it and at least help get you closer. Nicolas showed how you can clean up an Excel spreadsheet for import, or even clean up an Excel spreadsheet and then make an attempt at doing some matches offline and then importing the data directly. I think this will be a much more common theme where you process data outside and then you push it into your ERP where those shortcomings come up, and just use it as the central repository, your GL, your database, and push that data in directly via the CSV uploads. So that's what I think that's where I think you overcome it in these systems that don't leverage the latest tech.
Perfect. Awesome. I think this one looks like a great fit for Nicolas. This next question: what are some best practices for ensuring data security and compliance when we bring AI into the close process?
I always get this question, so that's very interesting. Two things. First, this is not a new topic. 15 years ago, when cloud arrived, also a lot of people were afraid to leave the financial data outside of their desktop, outside of the servers of the companies. And now nobody's asking a question anymore if you plug yourself to the cloud solution of this system, if you open through an API the connection, if you just send yourself to your email, which is hosted in the cloud, like of Outlook or Gmail, if you send yourself a report. Nobody's asking that anymore. And maybe now we have been a bit too, I would say, not cautious enough. And AI reminded us the data is really important. And because AI is more intelligent, or seems more intelligent than those ERPs, which are just rule-based, then people start to ask questions about, okay, what is happening with my data? And actually, those data or those AI companies, they have the same security standards than all of the cloud software that we are all using, because it's actually the same companies. Google is behind Gemini. Microsoft is behind Copilot and also has a big partnership with OpenAI. And then Amazon, AWS is with Claude and Anthropic. But one thing you need to understand is not all the plans that you choose when you use all of these LLM chatbots, not all of them have the same security standard. So what you need to do is and I will show you, I have it here. You need to go on the website of this LLM chatbot provider, and you need to read what do they say about their data confidentiality and data security standard. And so if we look at the two biggest ones, especially for corporate, which are Microsoft Copilot and ChatGPT. For Copilot is really, really clear. It says Microsoft Copilot is built on top of Microsoft current data security and privacy for enterprise. That means it's exactly the same security standards. So if you already use Microsoft 365, so all of the Office suite, then you can use Copilot because those are the same standards. And a lot of you actually don't know that you have already access, because a lot of companies, they kind of automatically give access, but the employees don't know that. And then for OpenAI, if you use the team plan or the enterprise plan, or if you use it through the API, then you are under a SOC 2 standard. And for Europe is also under GDPR compliancy. So all of this here is really clear. We all went to school, you can read that. Mm-hmm. If you go and get yourself knowledgeable on those requirements, then you go back to your company and you check what is the standard that the company needs to have to be able to use a tool. And most of the time, unless you are working for a defense company or a bank, this should be enough.
Yeah, and so as you look at vendors too, just from a vendor perspective, that are offering AI, as part of their product, most of the time they don't have their own AI engine. They lean on one of these other providers. I know. So OpenAI is a customer of ours, and we lean heavily on OpenAI for our AI processing as well inside of our tools. So we've got a flex analysis tool that leverages AI to come up with AI. So everywhere we leverage it, we point to exactly what you're looking at, Nicolas, like exactly their privacy terms and conditions, and we point to their SOC 1s and SOC 2s. We also have a SOC 1 and a SOC 2 as well. So I would look for that. Not all vendors have SOC 2s. Most will have a SOC 1. But that will help you get comfort from a vendor perspective as well. Kind of the same model that you just talked about, Nicolas. So.
Awesome. Okay, so I know we're 1 minute over, but just one last question for Nicolas. How can one join the AI Finance Club? Is it open to all?
Yeah, so it's not open to all because I still want to make sure people are motivated, and I invite a lot of experts to also work for us on this, to do master classes. For example, tonight we have a master class on building agents with Streamlit. Thursday I have a live course for all of the people who started right now with the AI Finance Club to start to go from beginner to pro at using generative AI. In 2 weeks we have a course on this N8N agent that I showed you. So this is why you have all of the courses. So I put a link in the chat, so check on the link, and if you're interested, just go ahead and book the first few months. This is really, I've seen in the stats, I don't know if Adam knows that, or you, Reina, but the last 6,000 CFO job posting in the US, 1 out of 4 posting had AI experience required inside. And this is increasing every year by 200%. So this is not anymore something just nice to have. It's something more and more required. And also the postings that I've seen that want that, they have always higher salaries than the rest. So that's also an investment for people in finance to become CFOs, and to make sure that also you learn at the right place all of the skills which will normally like help you with your career.
Definitely. Awesome. Well, thank you, Nicolas and Adam. We really appreciate your time. I know we couldn't get to all of the questions today. So if we didn't get to yours and you want to still ask it, definitely reach out to marketing@netgain.tech, and we will go ahead and respond to those questions. But thank you, Adam and Nicolas. We really appreciate it. Thank you for everyone that joined and for participating today.
Yeah, thank you.
Thank you, Renat. Thank you, Adam.
Thanks.